So we were doing depreciation, and now see this question. On 1st January 2015, the Jaipur Transport Company purchased a truck for rupees 4 lakh. On 1st July 2016, the truck was involved in an accident and was completely destroyed, and rupees 3 lakh were received from the insurance company in full settlement. So now this is a new type of question for you where you are not selling any asset, but you have to dispose of your asset due to some accident or some loss. On the same date, another truck was purchased by the company for rupees 5 lakh. The company writes off 20% depreciation per annum. So the rate of depreciation is 20% per annum on written down value method. So it is diminishing balance method, or you can say reducing balance method. And the accounts are closed on 31st March every year. So the closing date is also given. Give the truck account for 3 years. So we have to prepare the truck account for 3 years. Okay. So first thing, we will change the name of the account. Now we will be recording the transactions. The year is 2015. And the date is January 1. Jan 1 to bank account. And the amount is 4 lakh. Okay. Now the year is 1516. And the year 1516 usually starts from April 1st, 2015 to March 31st, 2016, as the accounts are closed on 31st March every year. So in that case, because there is no other transaction given, on 1st July 2016, this date will be after 31st March 2016. So this is a transaction for next year, not for this year. So I will be charging the depreciation on March 31st, 2016. By depreciation account. Then we will calculate the depreciation in the working notes. Depreciation on truck purchased on January 1, 2015. Amount is 4 lakh multiplied by 20% is the rate of depreciation. Now we have to count the time. So we have used this truck in this financial year only for January 1 to March 31st. Means 3 months we have used. So we will charge depreciation for 3 months only. Now if we will simplify it, 5, so it will be 80,000 multiplied divided by 4. And we will solve it, it will become 20,000. So 20,000 is the depreciation. Then by balance, carry it down. Now 4 lakh will be the total. And the balance will be 3,80,000. And this year will be 2015 because January 1, 2015 is given. So it means the financial year will be 14-15. Okay, now coming to the year 2015. Now year 15-16 will start. The previous year was 14-15 because the transaction was given on January 1, 15. So year will not change here. Yes. Now coming to April 1. We will first write down the opening balance to balance brought down. And the balance brought down will be 3,80,000. Now it is saying on 1st July 2016, this truck was involved in an accident and was completely destroyed. And rupees 3 lakh were received from the insurance company. So on July 1, what journal entries you will be doing, that you have to see first. July 1. The first journal entry which we will be doing after the accident is, because we have an insurance, so we will demand the money from the insurance company. We will file the claim with the insurance company. So for that purpose, we will do the entry insurance company debit to truck account. So the entry will be here by insurance company. And because they have admitted the claim for 3 lakh, that's why we will debit the insurance company with 3 lakh. Now, because we have used this truck for 3 months in this particular year, so we will charge depreciation also for 3 months by depreciation account. Now the written down value is 3,80,000. The rate of depreciation is 20%, and the time is again April, May, June, 3 months. So now it will be 1 upon 5. So 5 6 okay, 3,80,000 multiplied by 1 upon 5 multiplied by 1 upon 4. So we will simplify it. It will become 3,80,000 divided by 20. So it will be 19,000. The date is July 1, 2015 or 16. It is 2016. Sorry. So we are again doing some mistake because the financial year is 15-16. It will end on March 31st, 2016. And 1st July 2016 will not fall in this particular year because this is the financial year 15-16 only. So because there is no other transaction given in this year, we will charge the depreciation by depreciation account. And because now we have used this truck for 1 full year, so that's why 3,80,000 multiplied by 20%, it will be 76,000. Then by balance, carry it down. Again, we will do first total. The total will be 3,80,000. 3,80,000 minus 76,000, so the balance will be now 3,04,000. So we have completed 2 years, 14, 15, 15, 16. Now coming to the year 2016. April 1, to balance brought down. Till here, if any query is there, you can ask. Now in 2016, the accident has there. So the year will be 2016, July 1 by by insurance company. Now we will do that journal entry by insurance company, and we have demanded insurance 3 lakh from insurance company. And now we will charge 3 months depreciation by depreciation account. The written down value opening balance is 3 lakh 4,000. So on this value we will be calculating the depreciation 3 lakh 4,000 multiplied by 20 upon 100 and multiplied by 3 upon 12. So it will become 3 lakh 4,000 1 upon 5, 1 upon 4 divided by 20. So it will be 30,400 divided by 2, and that's why it will be 15,200. So the depreciation will be charged here 15,200. Now, because single truck is there, we can directly see that this is value is 3 lakh 4,000, and if we will deduct the both of the amounts, then we will be having a profit on disposal of this truck. So to statement of profit and loss, so second working note will be of profit on sale of truck. So its written down value is 3 lakh 4,000 WDV as on April 1, 2016 is equal to rupees 3 lakh 4,000 less depreciation is equal to, we have calculated 15,200 rupees 15,200. So it will come is equal to 3 4 minus 4, so 3 lakh, then 11, so 10 minus 290 289 288,200, 2 lakh 88,200, sorry, 800. 10 minus 2 8, 3 13 minus 5 8, 9 minus 1 8. Yes, it should be this one. Now we will deduct less sale value. Sale value is 3 lakh. So if you deduct it, we will get 3 lakh minus 2 lakh 88,000. It will be 12,000 minus 800, 11,200. So it will be equal to. So the profit on sale of this truck is 11,200. Now on the same date, we have purchased one more truck. So the date will be July 1 to bank account. And we have purchased this truck for rupees 5 lakh. Uh, Now on 31st March 2017, 2017, March 31st, we will charge its depreciation by depreciation account. So 5 lakh multiplied by 20%, 5 lakh multiplied by 20%, and the time will be from July 1 to March 31st. So it will be 9 months. So if we will be simplifying it, it will become 1 lakh multiplied by 3 upon 4, and that means 75,000. So the depreciation charge will be 75,000, and that's why its written down value will be now by balance carried down. 5 lakh minus 75,000, it will be 4 lakh 25,000. Now we can total both the sides. So it will be 5 lakh plus 3 lakh 4,000, 8 lakh 4,000, 8 lakh 15,200, 8 lakh. And if we will total this side, it will be 315, 375, 390, 200, 790, 200, then 8 lakh 200, 8 lakh, it is also coming 8 lakh 15,200. So this way this question is complete. If you want to ask anything, you can ask. If any calculation is not clear, any entry is not clear. Now there may be one confusion also in your mind that it is written here that we have received rupees 3 lakh from the insurance company. Then why we are not writing here by bank account? What will be the journal entries? Let me show you. First we will do the entry insurance company debit 3 lakh to truck account to statement of profit and loss. Sorry, no, to truck account. This will be the entry first with 3 lakh. Now later on, we will receive this money. At that time, we will do entry bank account debit. Three lakh to insurance company. Three lakh. So later on, first we will file the claim. So that's why we will debit the insurance company. Then later on we will receive the payment. So for this reason, here with the entry will be by insurance company instead of doing by bank account. So I hope now this point is also clear. There is no confusion regarding this entry. This one is a new entry for you in this question. Otherwise, earlier we were doing only by bank account. We were selling the asset, but it is not a sale of asset. It is sale of asset due to an accident. We are getting the money from the insurance company.